Millions of urban Indians celebrated New Year's Eve by ordering their favorite delicacies throughout the last 2 weeks of December. However, the most popular meal for both Swiggy and Zomato was biryani, with both companies reporting that they fulfilled over 1 million orders that day. Earlier this month, the most current financial data for Swiggy also became accessible, providing yet another opportunity for an investor into this duopolistic sector. Just like Zomato, Swiggy more than doubled its revenue in 2021-2022. In that year, its revenues were almost 1.3 times more than Zomato's. To achieve this income gain, Swiggy spent noticeably more money. In 2021-2022, Swiggy's net loss increased by 125%, while Zomato's losses grew at a slower rate of 49%. However, both businesses must strike a balance between growing their markets and achieving the profitability that their investors want. This is particularly true for Zomato, whose stock has dropped 64% from an all-time high since it went public in 2021. One explanation for this is the unrealized potential of online meal delivery. According to the report from research company Macquarie, India's market penetration in this industry is barely 7%, as compared to 50% in China and 35% in the US. The sector is predicted to triple in size in terms of value. According to a November 2022 research report by Kotak Securities, it was found that Swiggy's share in food delivery had since decreased from 50% during January-June 2021 to 46% in January-June 2022. Swiggy reported a 40% increase in gross merchandise value from January to June 2022, while Zomato recorded a 56% increase to $1.5 billion. However, it is important to note that both Swiggy and Zomato's operations depend on two very different groups of individuals. One group consists of highly skilled technical and management personnel, who are often the firm's permanent employees and are required to introduce new products, foster innovation, and crunch data. The other is a sizable collection of delivery partners or gig workers. For instance, Zomato had 3,517 permanent staff members and around 285,000 active delivery partners as of March 31, 2022. These two groups present businesses with two distinct sets of difficulties. One is to find and keep the top technology talent. Zomato spent Rs 1,633 crore and Swiggy spent Rs 1,709 crore on employee benefits during 2021-2022. This expense head contributed to 30% and 39% of income from operations. Even though Swiggy and Zomato currently have a monopoly, that situation might change. According to Zomato, a restaurant makes 307 on an average order size of 398 when it comes to meal delivery. Zomato also provides food items to restaurants, and it anticipates expanding its non-food delivery business. To conclude, both the competition and the undercurrent need to pursue growth will continue to be fierce.